Hello dear traders, welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. Yesterday, oil prices skyrocketed, having added about 4.5% in one day. Such a rapid surge was triggered amid worries over the brewing storm in the Gulf of Mexico, shrinking crude inventories in the US, and a fall in the US dollar exchange rate following Jerome Powell's speech. Brent futures managed to offset the recent losses completely. Last week, speculators were active selling the commodity after the prolongation of the OPEC Plus deal. It took 6 trading days for the oil quotes to return to the level of $66 per barrel. Moreover, they managed to hit new highs. Today in early deals, the Brent crude benchmark was trading above $67 per barrel. In the short term, a further rally towards $68 per barrel is possible. However, this level is unlikely to be breached, so the prices will retreat to $65.5 to $67. The U.S. oil companies slashed production in the Gulf of Mexico by almost 1/3 amid the threat of a tropical storm in the region. The workers from 15 oil derricks have been evacuated. The forecasts suggest that the storm will break out today. The U.S. storms are most violent in the period from August to October, but some tropical storms can form as early as in July. The local manufacturers often suspend their activity under the serious threat of a natural disaster. It results in a fall in the crude oil output and a short-term rise in oil prices. The shore of the Gulf of Mexico is a route for shipments of above 3 million barrels of crude oil from Mexico, Saudi Arabia, Venezuela and Colombia. Daily, about 2 million barrels come through the terminals of this transport hub. Yesterday, the Energy Information Administration released the crude oil inventories report that showed a notable decrease. The commercial stockpiles contracted by 9.5 million barrels, while experts predicted a decline of just 3.1 million barrels. The total volume of crude oil inventories came in at 459 million barrels. The petroleum exports rose by 58,000 barrels to 3.05 million barrels per day. According to the EIA report, a fall in the inventories was registered for the 4th consecutive week, 3 of which showed lower than expected declines. The continuous decrease is contributed to a seasonal factor and occurs every year. Yesterday, the US dollar inched down to 97 points following the speech of the Federal Reserve chairperson. Today, during the Asian session, the American currency continued falling. The risky assets are no longer under pressure, as the latest upbeat jobs report from the United States raised doubts over the possibility of the monetary policy easing by the American financial watchdog. The dollar-ruble pair moved to the downside amid a rise in oil prices. The Russian ruble became stronger than the currencies of other developing countries. The medium-term upward trend reversed. The nearest support lies at 62.5, where the lows of the previous wave can be found. Today, in early deals, the ruble reached the psychological levels. 5 minutes after the opening, the ruble reached the level of 62.93 for the first time since July 1st. By 10:40 of Moscow time, the dollar-ruble pair was seen to be trading at 63.01, having added 0.3%. We keep close tabs on the market developments. Stay tuned.